Good morning and welcome to Stock Market Today. It's Wednesday, November 25th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. Just a quick programming note. There will not be a show tomorrow. Markets are closed for Thanksgiving here in the U.S., and I am taking the day off on Friday. So there will not be a show on Friday either. I hope that you and your family and your loved ones have a happy and safe Thanksgiving here in the U.S. U.S. equities, speaking of, finished higher on Tuesday with the Dow, S&P, and Russell 2000 all marking record closes. Energy, financials, and materials were the strongest sectors. REITs, healthcare, staples, and tech lagged the broader tape. Treasuries were mixed with the curve steepening. The dollar was weaker on the euro and sterling crosses, little changed against the yen. Gold finished down 1.8%, and it actually at an interesting level here on the actual commodity, down around 1,800. WTI crude closed up 4.3% yesterday. As we get to the desk this morning, futures are slightly weaker, but off their worst levels. Asian markets were mixed overnight, with Japan and Hong Kong higher, while China was down more than 1%. European markets are mostly lower. Treasuries are unchanged to slightly bid. Dollar is higher on the major crosses. Gold up 30 bips after falling about 4% in the previous two sessions, and crude oil is up 60 basis points to kick us off here on the final day of trading before Thanksgiving. And we'll start out with the major market averages. And I mean, listen, record closes. For the S&P and the Russell, you can add in the Dow and the transports as well, all closing at record highs, record high closes yesterday. As we look at the structure of the market here, not a ton really changing, right? Our views remain intact, right? Bigger picture, uptrend, working top side from the consolidations. IWM clearly in everybody's focus right now, extending further above that breakout level at 170. Qs continue to grind, now pushing towards the top end of the consolidation that's been in place since the beginning of September. And the S&P, well, we've talked about it a lot. Realistically, when you're trading at all-time highs, there's no price-based resistance. Looking at support for the S&P 340, then 320, that's unchanged. 260 for the Qs, 170 for IWM. So our big picture view remains in place. A bullish stance as markets continue to work higher. And we think that as we work off near-term overbought conditions, the stage could be set to become more aggressive on the long side of the portfolio to position for a rally into the end of the year. That's our view. That's our framework. The question is always is who's going to be the fastest horse if that plays out and we continue to skirt towards the relative strength. We've talked about it. The rotation is still playing out. An ideal situation would be to see tech get in gear, right? And then, the stage is set, really set for a move to the upside. But, so far, the weight of the evidence supports continuation of the trend. That's our roadmap. That's what we're going to follow here as we head into the closing weeks of what has been quite an interesting year. Let's hit our market in a minute now. What are we writing about in the note today? Well, we hit on it already. Record closes for the S&P, the Dow, and the Russell. Transports also closed at a record high yesterday, so that sends a message of confirmation in conjunction with the Dow. Sentiment remains bullish, and more so this week. Speculators remain net long the market. I touch on this in my note. And as I said, futures point to a bit of a mixed open here today. Taking a look at the power bars for the major industries or indices here. Dow adds 1.5% yesterday, 4 to 3 bulls to bears. S&P up a like amount, 126 to 46 bulls to bears over there. NASDAQ was an inline performer yesterday as well, 1613 bulls to bears. Small caps outperform again, 831 to 197 bulls to bears. Bonds down, tick sending yields higher. Energy at the top of the leaderboard once again. Right, so hopefully you've noticed the subtle shift, right? I no longer talk about energy being a table pounding avoid, right? The rotation you can see it. It's fascinating to watch in the market, right? Earlier in the summer, materials, later in the summer, industrials. About a month and a half ago, the financials led by the banks, and now you're seeing energy come on. It's fascinating to watch it under the surface. That's why we look at the markets the way that we do. We're trying to catch these shifts as they're happening, and also being mindful of the fact it's not an on-off switch. You don't just go growth to value, large to small, right? You watch the shifts play out, you adjust accordingly. You're not making the all-in, all-out bet on any given theme, and continue to skirt to the relative strength. At least that's the roadmap that I find most helpful. I realize there are a lot of different ways to do it, but to me, paying attention to these shifts under the surface of the market is what I find to be the most beneficial. Taking a look at our stock of the day now. Speaking of materials, we've talked a lot about chemicals. We've talked a lot about the materials since the June-July timeframe. And here, we have a setup that really looks interesting to me. Tronox Holdings, TROX, the ticker symbol, up 3.64% yesterday. Very bullish stock, strong trend, strong industry group. If we think about this thematically, it's part of the materials that have been strong since the summer. Smaller cap, which is obviously we know has been strong of late. And then we kind of take a look at this setup here. And after trying to break out a couple of weeks ago, we've consolidated. Stock is oversold with the indicator rounding higher. So we have a very bullish stock that's seeing the intensity of its outperformance increase, become oversold, and money flow tripping back to the bullish side. So, if I'm looking for a setup, that's kind of it. As far as I'm concerned, nothing's guaranteed. You set your stop, you manage your risk. But what I see here is a stock breaking out above prior highs while intensely outperforming the market. To me, those are the types of names that you want to look for when we talk about what do you want to own and when do you want to own it. I think this one checks the boxes for the most part. So if you're looking for an idea, take a look at TROX here. TROX is our stock of the day. Taking a look at the sector tracker now. It's moving for the major sectors. There's your energy. Top of the list once again. Financials, materials, industrial. There's your cyclical rotation trade. Top four groups, all painting the picture that we've been talking about for months now. Middle of the road, discretionary comms and tech, all higher. And then you have your defensive groups at the bottom of the list. I mean, to me, this is a good looking board. Made stronger if we could get tech towards the top of that list as well. But I mean, this is a good looking board. Yeah, you have your cyclical names outperforming. You have your kind of offensive players like discretionary comms and tech higher over the past week. And you have your defensive groups or your more risk off groups lower and at the bottom of the list. I mean, to me, that's a good looking board as far as I'm concerned. And if we kind of drill down within the industrials, our industry in focus today is aerospace and defense. Been an outperformer over the past 6 months, leading the S&P by over 12%. Power bar ratio very strong, 6-2. Currently ranked number 13 of 21 subsectors. Textron bullish, Ducom Incorporated, DCO, and Muge, MOG.A, all with bullish Chaikin power gauge ratings, all holdings of a fund that has, this is an interesting look. I'm seeing this in stocks. I'm seeing this in ETFs, right? So let's start at the top. Bullish rating, strong trend above a rising long-term trend line. You're seeing a lot of situations now where we see stocks or funds taking out this interim June peak while seeing a personality change, right? We saw it in the insurance space last week. We're seeing it here now with space and defense, right? Rating turns bullish. We start to see some outperformance. Money flow goes bullish. And the fund or the stock taking out that interim June high, that's an interesting setup. We're seeing a lot of it. I think if you're drilling down and looking for ideas, you probably want to be paying attention to this group. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Dollar Tree up 14% on the heels of their earnings report. Mosaic, bullish stock, another chemical name within the materials space, up 12.84% yesterday. There was a Department of Commerce report. Travel stocks were strong yesterday. Carnival up 11.25%. United and American Airlines also part of that theme, also probably reacting to an IATA industry performance report that was out yesterday as well. So those travel names likely responding, right? We're talking about the fact that the market appears to be looking through some near-term headwinds to a world where there's a vaccine. Obviously, the travel stocks are perceived to be benefiting from that. So we saw some of that in yesterday's trading. Loser side of the board, earnings related news takes Best Buy down nearly 7%. Bio down 6.9%. Nothing company specific to drive trading there. HRL, Hormel, very bearish stock, down 5.6% following their earnings report. DLR, another very bearish stock, down 5.25%. Didn't see anything company specific there, or with Catalent. Both of those stocks down over 5%. So, realistically, we're in a bit of a news vacuum as it relates to company specific activity heading into the holiday. A lot of economic news out today that investors will be paying attention to, and combine that with the potential for thin trading. We could see some movement and volatility in the market today. But remember, it's the day leading into Thanksgiving. Friday's a half day. So just be kind of mindful of some of the moves that you may see out there. Let's dive into the charts now. On Wednesdays, we do sentiment, and today is no different. And I mean, I'm just in awe of this chart of the equity options put call ratio that has been persistently in an excess greed territory. I mean, not a lot to say. I'm just kind of reporting on it. Normally you'd kind of view this as a contrarian indicator. It's been down here so long, and I hesitate to say this time is different. I'm not going to say this time is different. There's no getting around the fact that options traders are bullish and sentiment is bullish. Take a look at the VIX at the bottom of the chart. After that spike towards 40, we've had a persistent decline back down to the low 20s. 20 is still elevated by normal, what's normal in this world, especially in the markets, but 20 is still somewhat elevated. But you can see that we are moving towards a greed position here as well. If you want to really take it another step further, take a look at the CNN Fear and Greed Index, which is now in the mid 80s and is in a spot of excess greed, right? Price sentiment tend to move together. S&P, Russell, Dow, the transports, all trading at all-time highs, right? You're going to get bullish sentiment. There's no two ways about it. When I look at positioning, the speculative traders in the S&P 500 futures products, still net long. If I look at a 52-week Z-score, I wouldn't call it egregiously long, but they're still net long. So, it's a bull market and everybody knows it. Let's kind of get that out of the way. Something to keep in mind in the near term. But, for us, the trends drive everything, and the trends are to the upside in the here and now. Talking about the Dow, everybody was talking about the Dow yesterday because we closed over 30,000 for the first time. Take a look at the Dow Jones Industrial Average here above a rising 50 and 200-day moving average as it breaks topside above those highs from earlier this year. I would love to see a momentum confirmation with the RSI actually becoming overbought, but holding bullish ranges for now is good, right? So we'd love to see confirmation with an overbought, especially if it continues higher. If we don't get that confirmation, there would be a divergence in place. So we're going to be mindful of that. We're going to watch it. It's a near-term phenomena, but the weight of the evidence still supports higher. And the weight of the evidence in our minds still supports a view of a rally into the end of the year. And for the Dow theory folks out there, it's not a buy signal. The Dow theory buy signal has actually been in place since back here when both the Dow, right, and in early April, we rally, interim pullback, and then take out the interim high. This was your Dow theory buy signal, right? Your textbook Dow theory buy signal. Go back to the chart of the Dow. You can see it, right? Same here, right? Rally, pull back, take out the interim high. That was your confirmation. But the simple fact of the matter is the transports made a new high yesterday as well. So if we look at the two together, we're definitely seeing some level of confirmation. So markets are moving higher. Is sentiment bullish? Yes, it's bullish, right? If we're going to knock what's happening here, we're going to say that sentiment might be a little too bullish in the near term. But the simple fact of the matter is the trends are to the upside. And we are trend followers, and we will continue to be trend followers. So that's going to wrap us up for today, everyone. Take us for a test drive, shakenanalytics.com/test drive. And heading into Thanksgiving, I want to say a special thank you to all of you who take time out of your day to listen to what I have to say. I know there's a lot of people out there commenting on the market, and I am grateful and thankful that you take time out of your day to listen to my thoughts and my views. I hope that you have a great holiday and a great weekend. I will be back Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.